Good day folks, Jim Langlands here from FX Charts with the currency outlook for the Finance News Network for Monday the 6th of August. Well, it looks like it's going to be a pretty positive start to the week following the non-farm payroll data on Friday. That was much better than expected, 163,000 jobs added as against the consensus of 100,000. Although the market was taken a little bit back by the unemployment rate, which actually rose from 8.2 to 8.3%. But overall, it was a pretty positive session, and risk assets generally had a pretty good day. The market also took a second look at Mario Draghi's speech of last Thursday and decided that the ECB looked like they are going to take some affirmative action on the debt crisis, probably through a bond buying programme. And that put pretty much an underlying bid beneath both equity markets and the euro. So that was a very positive session, and that's run through until this morning. The euro's up around, it's just under 124, and looks as though it could head a little bit higher. Likewise, sterling's at 156.25, that's pretty whippy, but it looks as though it might have a bit of a base behind it at the moment. Dollar Swiss at 96.90, and dollar yen's not doing quite so much, that's at 78.60, pretty much stuck in its 78-79 range. Aussie and Kiwi, they both had positive sessions and recovered from the sell-off on Thursday. The Aussie's now up against resistance of 105.80 and the Kiwi at 81.85. Both look like they could go a little bit higher, and I think there's a chance we could see the Aussie above 106, possibly towards 106.30 in the next couple of days. So all that risk assets look to be pretty well generally bid. Economic-wise, there's not an awful lot of action today. We've got the RBA interest rate decision tomorrow to look forward to, and tonight the EU Sentex Investor Confidence Index. That's really about it. But risk assets look as though they're going to hold their own today. Equity markets look as though they could go a little bit higher, and it's a good chance we could see the S&P look to take out the 1390 resistance and head towards the 1400, 1420 area, which was the previous high. And if that's the case, the other risk assets will be taken along for the ride. That's really about it for the day. If you do want a more comprehensive outlook, though, go to the website as usual, www.fxcharts.com.au. And that aside, please just remember that any outlook here is a personal view only and not meant to be used as trading advice. So that's about it. Have a very good day, and we'll talk to you tomorrow. Cheers.